Yeah, I mean, it's completely on track in terms of the fact that the market internal measures were very, very oversold, and now they're rising from that oversold territory, which is very constructive. So even yesterday, which I wouldn't define as a retest because it didn't really follow a substantial rally, but rather just part of a consolidation phase, that consolidation phase reflects, believe it or not, improved short-term momentum following what we saw last week. So to me, the correction is over. And now we'll position for upside follow-through off of that oversold extreme, look for momentum to continue to improve, and then maybe we get a retest. The retest does tend to be fairly harrowing, as you could imagine, but I don't think that was it yesterday. What we did notice overnight in Asian markets were some gaps down on the charts, and those gaps down, when they follow down moves like we've seen there, tend to be more exhaustive in nature. So you better believe if China's bouncing, emerging markets are bouncing, then we're probably going to be pretty well off too. And
your view is that China's, that maybe some of those markets are bottoming then, is what you're saying. Does that matter?
Well, I think so. And it's certainly not the most attractive market from a technical standpoint, as you can imagine. It is a downtrend, and yet you have oversold extremes there that have been matched in the U.S. So I think it's compelling, especially from a contrarian perspective, where sentiment is often at the worst is where there's opportunity.
Okay, I'll get to you in a second, JJ. I just want one more question for Katie. So 2768 on the S&P. Will we get another print? I mean, you don't think we go below 27 then, I guess?
I would sort of look at the analog to the April low in the S&P 500. So I think we will see some kind of retest, but maybe not a takeout of the lows. And with that in mind, I think a bullish bias is appropriate. With the pullback, we haven't seen long-term momentum flip negative. We haven't seen a major loss of breath that has affected the leaders of the marketplace. So the pullbacks are not breakdowns at this point, and that's what would make me more bearish.
And then do you think we get back somewhere near 3,000 before there's any future trouble?
I do. I think so. And remember, there is some positive seasonality to year-end. And, of course, October tends to be characterized by volatility. So I do think that we'll see a rally into year-end, as we often do, and would position for that. The intermediate-term gauges have already now been deteriorating for several weeks. And in a bull market, they only tend to do that for several weeks. So I think we're at that point.
What do you agree with and disagree with, JJ?
I do agree with Katie on one thing in that, you know, we may rally into the end of the year, but I don't think it's going to be a very clean rally into the end of the year. What I mean by that is I think we're going to continue to see us stay near this more normalized historical volatility. I believe there'll still be a lot of back and forth as we get there, especially as we head into the midterm elections. You know, Jamie Dimon talked last week about a lot of political situations around the world that can sort of blow up, and I think we saw some evidence of it this week where, you know, in different, be it in Asia, the Italian situation, Saudi Arabia, et cetera, you're just starting to see little hot pockets of news that bring the market down. I don't see an end to that before the end of the year, and as I said, throw midterms on top of that, what happens with tariffs, and outside outside true equities themselves, that's the stuff that causes volatility. What I will say, I do agree with Katie, is that the fundamentals are solid. You look at earnings today. You guys just got done talking about Procter & Gamble and Honeywell. So, you know, you're seeing good earnings, and earnings at the end of the day are what drives markets. And so with that, with good earnings, we should continue to see the market go higher. But, you know, in my career, I can't really remember a market that's got so much noise around it, and that causing people to really question their investments after time, or maybe have a little bit of a, it seems to me that the holding periods for people have never been more divided. And what I mean by that is people are in for the quick hit on bounces, or they're saying, you know what, I'm really going to have to ignore the day-to-day for a few months here, because if I don't, I'm going to drive myself crazy and shorten my holding period.
It wasn't long ago that we were saying this, going into the midterms, this looks different than what we usually see. And what we usually see going into the midterms is a sell-off followed by a rally after the election's over. And given August and September were so good in terms of, you know, the market doing well, we thought maybe it would be the opposite. But it looks like we finally did get a sell-off going into the midterms. Typically, after the election, isn't it bullish, Joe?
Yeah, and that's why I said I agree with Katie, but in that I think we can rally into the end of the year, but I think getting there is going to be uglier than normal. It's not going to be, in my opinion, the straight up we saw from the February lows where we're just up every day. This is going to be a lot of back and forth. And the last thing I'll add to, you know, so many of the retail investors who watch you every day, Joe, these moves feel bigger than they are. And what I mean by that is moving 300 or 500 points now isn't what it was 10 years ago.